Students and working accountants. Welcome to my Expert Tally Train YouTube channel. My name is Barbara from Hyderabad. So in this video, we are going to discuss about the interest calculation part 5. So before entering into the topic, a request to you. Many students they are entering the channel, they are watching the video and going off, they are not subscribing to the channel. Please, I am requesting you, everyone, if they are not already subscribed, please everyone who are not subscribed, please subscribe to the channel and press the bell icon next to the subscribe button and select all so that you will get notification for all the videos which I upload in my channel. And another most important thing is, please everyone watch every video till the end. Don't skip in the middle. If you skip in the middle, you will understand the topic or subject up to that point only. And next, the remaining part of the subject, you will not understand. It will be like half knowledge. There is some no use. See, in the college, when you go to the college, for the academic qualification, we spend at least, we sit in the college for 2 to 3 hours. But here, we are learning reality trained software professional training. For that also we have to spend time at least. So at least you have to spend in video around 40 to 15 minutes and maximum less than 1 hour. So we have to spend the time and we have to watch the video fully till the end. Then only you will understand the full subject and you will get a very good knowledge. And also you have to watch many times the video, you will get the full knowledge of the subject. Okay, now we will get into the topic. So already we have completed 4 parts of the interest calculation. Only all the parts we have calculated only with simple parameters, simple settings. With simple parameters, we have calculated the interest. In the first one, we calculated simple interest on loan given by us. And the second part, simple interest to the on the debtor, because for the goods sold by us on the debtor, we discuss about the calculation of simple interest. Third part. So the second part, compound interest on the loan given by us as well as loan taken by us, how to calculate the compound interest. The fourth part, so for the sales and purchases, on the sales and purchases, that is the debtors and creditors, calculating the interest in the compound way. That is calculating the compound interest for the debtors and creditors. We discussed in the fourth part. Now, here we are going to discuss is the calculation of interest, calculation of simple interest only or compound also will be the same. It will be similar to the calculation. The compound interest will be only at the time of transfer. That's all. Transfer of interest into the account. That's all. All of the calculations are same. So here we are going to calculate interest on the debt, purchase and sales. Purchase and sales, that is debtors or creditors. Anything okay. Debtors, that is the same. The ledgers will change. Debtors will change. Interest receivable, interest payable, and debit note, credit note. That's all. Calculation that is the same. So in this case, calculation of interest with advanced parameters, simple parameters in the land so far. Now we are going to learn the calculation of interest with advanced parameters. See here, I am sharing the interest. Already we have a company, already we worked in the first one. So here company is created. This is the creation of the company, and after creating the company, it is a new company. You will go to the F11 features directly, or if it is an existing company, you have to click F11, go to the features. So here, first one will be automatically, it will be activated, it will be enabled by default, it will be enabled, and this one inventory we require now, inventory for purchase of goods, sale of goods. So inventory is to be enabled, integrate accounts with inventory enabled. If you enable the inventory, this bill-wise entry, enable bill-wise entry is also necessary, because we have to, in the case of inventory, we have to save or we have to maintain the bills. Bill-wise entry you have to make, that is, every bill is to be saved. That is why bill-wise entry is compulsory, it is to be enabled, and tax is not required now. So this is to be required, and these are to be enabled. And now we are going to calculate interest. So enable interest calculation, that enable this also, then accept. Okay, I'll tell you why the bill wise entry is required. Now already we made an entry previously. See here, previously we made an entry on 1st April. We made an entry. So we sold goods. We made an entry, and here, so this is the number one. So 50,000 entry is made. So with this, after completing after the entry, first entry is over, and after that, we have to calculate the interest. Same by same. Generally, what we do is we go to gateway of tally, then display all reports, statement of accounts, then interest calculation, and the fourth step is the receivables and payables, the list of all the debtors and all the creditors to on whom in the accounts in which we enable the interest calculation. All the list or all the calculations for all the debtors and all the creditors will be listed. But if you require to check up the interest or capital interest for a particular party, you can go to the ledger. So we come to the debt computer. These are the 4 steps we have completed this. But instead of that, instead of doing this, see here. Display more reports 1, statement accounts 2, interest calculation 3, and ledger 4. Then we come to the ledger account. The ledger of the part 4 steps we have asked. Without that, simply what we do is, so after making the entry, that is the sales entry, just you can go to this. With the help of we can do any work without closing this. Any window, we can go to anywhere and whatever work you want. So here, you see, click go to, and in the search bar, just to type interest. Give INT, so interest is shown, interest options. So ledger interest calculation, for particular ledger interest calculation. So interest calculation is being sent directly with them to computers. So here this is the interest calculation page. So in this interest calculation, we have to the period. For example, 1st April to 1st May, for example, that's given. So here is given. Okay. So one more thing is, before this, before coming to this, when this in the ledgers, we created sales and we created the party also. The party, when you are creating the party here, automatically this activate interest calculation will be there. That option is there. It will show no. We have to make it. We have to enable that, activate that. That is activate interest. So to enable the interest parameters will be all. This is simple parameters. And in this case, it will be no, but it will be no. So here, calculate interest transaction by transaction. For every transaction, from the date of that transaction, calculate interest separately. Every transaction, you have to calculate interest separately. That is why it is called as calculate interest transaction by transaction. For that purpose, we require in the ledger, the parties ledger, maintains balances bill by bill, making yes, bill wise entry. We make it. So every bill will be separately saved. So for our every bill, calculate interest. So make it yes. And on that, so this simple interest calculation, when you set up, so all the way, all the time, for all the invoices, all the transactions, the same configuration, that is the same parameters will apply, interest will be calculated in the same way. But for every transaction, one after another, for every transaction, if we want to make some changes in the parameters, these are the simple parameters. In the parameters, if you have to make some changes, then after every transaction, we have to change this. So we have to get this one. For that purpose, we make it yes, and there is one more option will be there. Will be no only one more option will be there. Override parameters for each transaction. That is, for every transaction, we can change changing means overriding. There is one parameter, we can change it means overriding. So override the parameters. It is given. So if we give as after every transaction, this name interest parameters and these parameters will be shown after every transaction. In the transaction at the end, when you save it, the bill wise details will be saved. And after that, these parameters window will appear, and in that the parameters, you can change them, or as it is, if you go on enter, pressing the enter, the same setting will be continued. For that purpose, it is necessary for overriding the simple parameters. If you make yes, it will happen. For the time being, we will give it no, and this we know. So the first date, don't add. The last date, that is the ending date, the calculation date, don't deduct. This is adding and deducting because from first to 30th, second to last next month, first, that is before date. That is why you don't add this. The first April means don't add first April means don't add means from second April you take. Okay. So always you keep these two both yes or both no. If you add direct, the adding and deducting, that is deducting the last date, ending date, adding the first date. So both are yes means add the first date, add the ending date. If it is no, don't add the first date, don't deduct the last date. So we take it as no both, and this you will give no, and there will be this one. This is what we did. Already we can written this, accept this. So with this, if you go to the interest calculation, now we go here, or we can go to INT, then go to interest calculation, the party, select the party, 1st April to 1st May. So here, and then Alt F1, if you click, or Alt F1, or just enter, you get the details. So to open or to close F1 or Alt F1 or Alt F1, whatever it may be. You click, it will open. See here 50,000 rupees from 1st April to 1st May. So we are given no, adding the first date. So that is why it's not adding. It's taking from the second. From second, add that, don't add that, but don't see no means don't add the first date, not added. Don't deduct the ending date. So this date is not deducted. So 1st April to 30th April is the same. 2nd April to next month, previous date. That is 2nd April to not 2nd April, May. 2nd April to 1st May will be the month. Okay, like this. This is simple method. Okay, but now there is one more option there in the interest parameters. Another option, override parameters for each transaction. That will make the result simple transaction. Simple parameter only. Go to that. So we don't. You close this one. Go back every time. Don't open. Don't close. Keep it as it is. From here, with the help of go to, we can do everywhere. So click go to. Now what you have to do in the ledger, that is in the ledger of the party, interest parameter, that is activate interest button. If you click the interest parameters, you have to make the change. That is even changing means alter master. You go alter master, the party. So this one here, if you come here, you will make it yes. Say the second one, it is. The second one is no. We make it yes. That is after every transaction, these parameters, interest parameters will appear. We want to make changes, we will change. Okay, so we'll make it yes, no. Previously it is not no. It is no. Now we make it yes and accept this one and accept the ledger also. Okay, now what we do is accept that. Now what we do is just escape. So here the previously interest is calculated, interest is shown first April to the first May. Interest is shown. Now the interest is disappeared. Why? Because we enabled overriding option after passing the at the end of after every entry, the interest parameters window will appear. If we want to make changes, we can change or we can accept that easily. But here, at the time of that previous voucher, after that, this is not enabled. No, at the time of that voucher, it is not enabled. That is why it is not calculated now. So now what we have to do is we'll go to here. We will go to the voucher. That is the sales voucher. Why is that? It is in the ledger. But now to make the changes in the master, we use this. Now you have to see the voucher, the sales voucher in the ledger. So here you see this side. Ledger vouchers means vouchers in the ledger. You make it, you click it. So select the ledger. So here, here. Now open this, and now again go on clicking yes. Go on clicking and go on clicking, and at the end accept. This is the delivery details. After that, so now we enable that override option. So now that it will ask you, because previously it was not asking calculate interest. When you make the changes after the entry, so the interest will not be calculated, will disappear. So here now, if you want to make changes today, all balance is taken. We give debit balance, you can give debit balance or all balance, anything. We can keep this also as it is and accept, and that is accepted, and accept the voucher also. Now come back, come back, come back. See, again, the interest is showing because first before, after the entry, we made the changes after the entry. That is why it disappeared. And again, went to the voucher. That voucher is accepted. And at the end of acceptance, the parameter window appeared. Then we accepted that also not. So after this is only simple in calculation of interest with simple parameters. Now we will learn about the advanced parameters. We keep this window as it is. We will make many entries one by one by one. Sales entries. We will see the difference with the advanced parameters. Now we will go to the advanced parameters. So advanced parameters, where you will do that advanced parameters will be given taken in the ledger, that is party ledger. So click go to. So alter master, that is party ledger means party master. Go there, go to the ledger, and what is the name? Paper computers. Now you come to the accurate interest calculations here. So now only simple interest parameters are there. Now you want to make advanced parameters. Now click this also, these two are made. Okay. Now go to these two are made. Okay, yes, this is also made, yes now. And now go click F12 and show use advanced interest parameters. Make it yes. If you make it yes, see this one line is available previously, simple parameters. Now advanced parameters, some are available here, advanced parameters are available. Okay, in addition to that, here also, this is transaction calculating interest one by one, all the transactions. This is for each transaction, overriding a parameter. The first one is overriding the simple parameters. Now, advanced parameters also we can override. That is, override advanced parameters. So, both simple and advanced. And with this, at the end of for every transaction, the purchase or sale transaction, the parameters window will open. Now, for advanced window will also open. For that, we will make this also yes. So, both must be made yes. Okay. Now, made yes. And in this, every transaction, at the end of every transaction, this parameters window will open. Now, then we can make all this, like what you call the advanced parameters. We will make the changes to see how the interest is calculated. Now, accept this one and accept the ledger also. The ledger you made. And now, come escape. So, interest. Now, we will make entry. We will make entry. So, here, we make entry that is override advanced parameters. We activated that's all. The advanced parameters we have to set up at the time of entry. If you ask me the parameters, then you have to set up the parameters. So now, now what we have to do here to change the parameters, alter master we used. Now to see the voucher, that is for accepting the voucher for the parameters, we went at ledger voucher. Now what we have to do? We have to maintain, we have to create, or we have to make an entry, that is sales entry. So for sales entry means voucher, that is called as create voucher means making entry, voucher, making a voucher. So create voucher, you will take up the same date, the sales now is number 2. So take this party, again make the sales, and we will take it this one, take HP computers, 2 numbers, 25,000. Okay, now it is completed. Now it is accepting. This is the bill details. So number 2 bill number they are taken. Now it will ask you the parameters, the advanced parameters. See, now it is asking the advanced parameters. So first 2 line simple parameters that we know. If you want to make changes, debit balance is taking. We can make it all balances or debit balance. In the case of creditors, we can take credit balances. Now it is debtor, debit balances. Or any case, we can take all balances, no problem. Just we take the debit balances. Now here there are applicability. There are 2 ways. Always past due date. One is there, and other from means here, that is interest applicable from. It is applicability always applicable from. There are 4 options. Date of applicability, due date specified during entry, due date of invoice or reference, then effective date of transaction. We will take up the first 2 in this video. The other 2 will take in the next video. In these 2 cases, see here, The first case, so in this applicability, there are two, applicability and past due date. So in this case, in the case of first applicability, in the case of due date of invoice, in these two cases, we can take either this one or this one. So the calculation will be different. But in the other case, specified during entry, effective date of interest, we need to take the cash period. You can take just always. Means always means this will not work and this will work. And if we take past due date, this will work as well as this also. These two will work. We take always. This will be silent. Others will be accepted. So we take a first always. You take always. From means you take a, that is from means applicable from. This is applicability always. Applicable from. You take date of applicability. Date of applicability is you. So that when it is applicable means, so the date of invoice first that we cannot change. From that date up to which date, if you don't give any date, so this rate of interest will applicable. The same configuration will continue for any time we select. For any time we select, if you don't give any date. This is from, if you use some due date, for example, 25th April that given. That means this 2% will be calculated. Date of applicability is first to 25th. So up to 25th April only, this will be calculated at the percentage of 2%. At a percent, 2% it will calculate. And after that, if you select a date, anything above beyond this date, it will not calculate, it will calculate up to 25th April only. If we select a date, we select a date period date. Below that, before that, it will be shown. It will be shown that I will tell you now. So 25th, and here another one is rounding. We know already rounding invoices. Take normal rounding, select one. That is what we call limit one, accept. So this is accepted. In this invoice, after accepting the details, that is the invoice details, this configuration is made. So this is to be. So this invoice is also accepted. Now escape. So we are coming to the interest calculation. See here, the second one, the second invoice 50,000 rupees, and from 2nd April, 1st April means you take from the next day, 2nd April to 25th. So up to 25th, this is the simple interest of old one. So if you, whatever date we change, it will calculate. Because if the interest is transferred to the account, then it will not calculate. Up to this date, this is the interest. If it is transferred up to this stage, April to May, again if you try, it will not calculate anything after this date, that is from 1st May to June or something, it will calculate. And if the amount is also paid, the interest and amount is paid by him, then interest is not calculated at all. That is limit of. Now there is one simple interest, simple calculation. That is simple parameter. Now it is 25th. Okay. Now what we did, 25th April we gave. So it is calculating up to 25th only. For example, see here, any date if we select after this date, that is we select up to 1st May, but it will calculate only up to 25th April. If we select any period date before that is the previous, it we can calculate. See here, it is up to 25th. It is calculating up to 25th. If we calculate up to May or June, it will not calculate. It will calculate only up to 20 because we have data applicability from 1st April to 25th. Before that, any date we can see, we select here. If we select 1st April to, for example, 10th April. So here, that is before 20th, 5th. That is why we select up to 10. It is calculating 2nd to 10th April. So if we select again up to 26th April, so it will calculate only up to 25th because we have given in that data of applicability 1st to 25th given. It will calculate only up to 25th. So if we calculate up to 1st April to 1st May, so this will be calculated because it is there. But here it will calculate only up to 25th. This is date of applicability always. Now we go to next row. We will make another entry. That is, we will make another entry, another voucher. It is not digital voucher. So create voucher. We got another one. This is the third one. Select this one, given, accept, sales. Again, you can select anyone. I am selecting this again to 25. After this, after the invoice details, now it will ask you again the parameters are there. Now in this case, we will take in this applicability, we take past due date means after the due date. So it will calculate after the due date. So in this case, what is the due date? First April is the bill date. If we do some date, some period, some credit period, after that after completing the credit period, that will be the due date. After the bill interest will be calculated. Otherwise, bill date itself is the due date. But here, the bill date that is in the bill wise details, we have not given any credit period. So there is no credit days. There is no credit days. So bill date is the due date. Cash due date means after the due date, there are some period details. Zero is there. You don't give any dates from 1st April to that day. So cash due date, if you give 10 days, that is after 10 days, that is, and here you will take up date of applicability. Date of applicability. If you give some date, so it will calculate up to that date only. If you don't give, it will calculate forever, whatever any date it will calculate. So here 10 days given means from the date of applicability bill, it is 1st April. From 1st April, so 2nd April it is calculated now. Now it will have 10 days more. So after 10 days only, interest will be calculated. So 1st April means plus 1 plus 10, 11th April is the due date. Then in such case, what will happen? One day it will leave. That is from next day. So this is the, and this normal rounding, you take limit 1 and accept, and that will be accepted. That is the parameters are accepted. Now the voucher is also accepted. Now escape. See, this is the third one. Now you see, so previously 1st April was the date. So from 2nd April it's calculating. Now cash due date they are given 10 days. That is why after 10 days from 2nd means 12th is after 10 days. From 12th only it is calculating. If we give here 25th April, it will calculate up to 25th April only. We have 2 days, we have not given anything. So it is up to 31st. That is 1st May, calculating up to 31st from 12th. Suppose if we do 1st May to 1st June, for example. So it will calculate up to 1st June. But starting will be from 12th April only up to 1st June, because 2 days in the previous case here we are given 20 days, but here 2 days we have not given. So whatever date is select, the starting date will be the date after, after completing the past due days we are given that. So in the same case, we will create another voucher. So in this case, here sales laptop, two numbers, 25,000. In this case, again, this is the fourth number. Here, now again, parameters, debit, now here will come here. So, cash due date only will come here. So, here, before that, when I am calculating this bill-wise details, here we are giving credit days, for example, 5 credit days. 5 credit days we are giving. So, this is we are giving 5 credit days. After the credit days, after 5 days, after the credit days, it will be the due date. 1st April means 6th, 5 1 plus 5, 6th April will be the due date. You keep it as it. 5 days you are giving credit. And now in this parameters, here, past due date. So if you did give anything, only that 5 days will be taken. After that, interest will be calculated. Again, you are giving 10 days here, date of applicability. Okay, so we have given 10 days. That is, 5 days already given there. That is the credit period. Again, past due date, we have given 10 days. Total it will take after 15 days, that 5 plus 10, after 15 days only, interest will be calculated. 2 days we are not giving. If you give the 2 days, interest will be calculated up to that date only. We don't give whatever the date we select up to that. Now accept this, accept the invoice also. Now escape. Here, in this case, from 12th it is calculating, because in the past due date we give 10 days, it has taken 10 days. Now here, past due days plus in the credit days also we give 5 days. Total will be 17 days. So that is total will be 15 days. So 2 plus 15. This is the first one. 2 plus 15 means actually 15 days plus first means 16th will be the due date. Total 5 plus 10, 15 plus 1st April means 16. So from next day we calculate from 16th to 1st June. If you take 16th April, if you take 1st April to 1st May, so it will calculate up to 1st May from 17th. But starting date will be different. This ending date will be whatever we select. Here, you see. But this will not change. You are given 25th. You calculate up to 25th only. This it is given 1st May, 1st May. If you take 1st April to 1st June, Both will be calculated up to first June only. But the starting date will be, in these cases, 1st April is the due date. So the next date is calculating. Here we have given from, we have given past due date 10 days. So after 10 days it is calculated. Here we are giving past due date plus in the credit days in the bill by details. Maintain balance bill by bill. There also we give the credit days we are given 5. Total will be 15. So it is taken 15. That means approximately this is calculated. This is about the always and past due date and applicable from date of applicability. Now again we make one more entry. One more entry we take up. So the one accept, sales, and here this we are taking two pieces. So here again. Now we come here. Now we are not giving any credit days, and now accept. Now in this case, so first one, up this we are not changing. Here always you are taken. Always you are taken. Next you will take this applicability you completed. Always you are taken as well as past due date we have taken. But now we will take up applicability. For this applicability, we will select only always. We use always only. Always date specified in the entry. That means the configuration will be made. In the entry, we can give different dates. So it will be calculated many times. That is, the interest will be given dates and interest dates, everything configuration, that is the parameters will be given during the voucher entry. We will not change in that. Here only during the voucher entry. We select, see, if you select, so 2%, this is from 1st April. The applicability, 1st April, it is not working. You cannot change it. 2 only you can get. Here, from 2, you can make it from 5th April. From 5th April, or we can keep it as it is. And to 30 April, for example, 30 April. Up to 30 April and normal rounding, limit 1. So it means 2% is the percent interest rate from 1st April to 30th April. So for this period, this is the 2%. Okay. So if you accept this one, so from 1st April up to 30th April only, this will be calculated. But now this is date specified during entry means we can do many dates and many returns. So up to this, the percentage 2%. Next one, 3% calendar month, all balances or anything, all balances, and now always, and the due date is that is applicable from specified due date. So here, so up to 30th we have completed. Now from there, up to 30th we calculate. From 30th means next day, from 1st May, 30th to suppose 31st May. Up to that is next month. This will take a month. So in the next month, after the 30th April, up to 31st May, the rate will be 3%. So we are changing. Again here, we will make it 4%. Calendar month, all balances are debit balance, whatever it may be. All balances, always, and you will take up again the same thing, date specified in the during the entry here. So this is 31st done, then 31st 2. So like this, we go on giving different dates from 2. Different dates from date to date, different dates and different purchases. You give any number of them. But now we will give it. And then now here, due date I am not giving. So with this rate, this will work. This rate will be up to 30th April. This rate will be up to 30th. And this rate will be from 31st. There is no. So any date, it is the same rate. So if you calculate up to 31st, 30th June, 31st July, or any date, you select, this will be calculated at this rate. The due date, that will calculate up to that date only. Then we don't do that at the end. We implement this. The calculation will be at this rate for all the days. Okay. Now accept this, accept it. So accept this one. Now escape. Now you see here. Date is check. For this last one. So from 1st June you are given. No, from April, 1st July you will take. For example, 1st July. So here. So this is okay. Now here, the first one. So date mentioned in the entry. Okay. 2nd April, 1st April we give. 1st April to 30th April. So next date we get 2nd April to 30th April. Here the rate of 20%. The same entry na, at the rate of 2%. Then next date will be 1st May. 1st May to 31st May, the rate will be 3%. And then from 1st June to 1st July, we are calculating up to July. That is why fortunately for this we are getting 4%. For example, if you give 1st April to 1st August, you see this is the same 2nd April to 30 April, 1st May to 31st May. That will not change. The last one is from 1st June to the 2 days you have not given. That is why what immediate we select from 1st June to calculate 4% till whatever the date we select. Here up to August. Previously we select July to calculate up to July. Now we are given 1st August. August we are given. So from 1st June to 1st August, that is 4% if you calculate. So if you calculate, if you give here escape 1st August, it is we are given for example 1st September. So this is calculated from 1st June to 1st September, 4% will be calculated. So all this will not change, and these are changing because the end dates are not. Okay. This is the starting date will be different. After 10 days, the past due date. Here, 5 days in the credit period, that is 80 days, plus 10 days in the what you call past due date, total 15 days. The from date is changing. 2 date, we are not given any 2 date. That is why 2 date, whatever date we select, after that we calculated. Here, during the entry, 2% we are given 1st April to 30 April. That is why for that only it's calculating. And next one, from 1st May to 31st May again 3%, it is calculated 80%. Then 1st June to end date you have not given, but rate is 4%. So after 1st June, any date you select will be calculated at 4%. Okay. So this is about calculation regarding the advanced configuration. So always as well as past due date with date of applicability number 1 option, number 2 option, date specified during entry, space which is specified, this is space specified during entry. This is the date of applicability, that is in these two cases, what you call past due date. This is all always, and past due date 10 days. This is past due days 10 days, and in the credit days also 5 days. This is calculated. And this is all these different dates, and different dates are given during the, that is date or rate specified, date and rate specified during entry. It is calculated. The other two, due date of invoice or reference and effective date of transaction. These two we will take in the next video. Okay. So with this, I am closing. This interest calculation, advanced calculation will be a little bit confusing. So watch this video many times, and also to take one example of sales entry, and try all this by watching this video. Try all the options up to these 2 options. Try all these options and many times, and you get it. Yeah. Otherwise, it will be confusing. You have to practice more. Then you will get it immediately. You will get the knowledge of the interest calculation. The other two will take in the next video. Okay. After that, bye, and all the rest. Bye.